morning. Welcome to the E3 Live Market Report. I'm Pat McClatchy with the Ag Market Network. We'll be starting in just a moment as our export sales start to come out. I want to talk to you about what we're going to be doing today. We will review our exports as they come out, try to break them down for you. Then we're going to do something a little different. We're going to review the last month. Normally we review the last week. We're going to look at the last month and just see what prices have done. And then we're going to have a special report on the dollar and how it affects the markets. So we'll get into that. Let's first look, with a little over a minute to go, let's look at what's happened overnight. We have the cotton market up 51, soybeans up 4. We have corn up about 3/4 cent, wheat up 4. Then the crude oil is up about 49 cents a barrel. The dollar is down 51 points. Gold is down about $5. It looks like overnight at least the S&P index is trading down some. So we will also look, just as a reminder of our last week's number a week ago. Cotton had about 144,900 number. Expect that to be lighter than that this week. Soybeans 102,100 metric tons. Expect that to be better. Corn 867,900. Looking for that to be in the same area. And wheat 397,500. That's probably going to be a little bit lighter than that. So we will have this out momentarily. As these numbers come out, we will see what the reaction is. We have personal income coming out, so that's going to be loaded in first before we get to our numbers. Here we are. We have first. Excuse me just for a second. Okay, here we go. Cotton number 124,200, which is an excellent number. It is lighter than last week. Cotton market is up 65. It likes that. Looking at the soybean number, 433,400. As I mentioned, last week's number was 102,000. Much better there. Soybean market is up 5.5. That's a positive reaction. Let's look at corn, 832,500, pretty close to last week's number. Corn market up about a half cent higher than it was just moments ago. The wheat wheat negative 449,200. Not a good number there. So far, no real reaction in the wheat. Maybe it expected that. I did not know the market was expecting that. So let's look at the breakdown here. We've got cotton breakdown of the 124,200 running bales. That's down 14% from the previous week, but that's up significantly over the 4-week average. Vietnam took 46,200. China took 19,800. South Korea took 15,400, and we've got other countries of lesser amounts, but we do have pretty broad-based buying. Very light cancellations. New crop sales 42,900. So that's our number there. Cotton market right at the moment continues to rally, up 78 on the day at 67.86. Go to soybeans, 433,400, up noticeably from the previous week and from the 4-week average. China took 199,300. We have unknown destinations of 80,400. Pakistan took 65,900. Had a small cancellation from Malaysia. And that's it for that number. The bean number was up 4 before this started. Beans are up another penny, up 5. Corn number Corn, 832,500. That's down 4% from the previous week, but up 33% over the 4-week average. We've got Japan taking 353,500 metric tons. Saudi Arabia took 146,000 metric tons. Mexico took 89,300 metric tons. And corn was up about a penny right now. Corn's up a penny and a half. And lastly, wheat. The wheat number of the negative number of 449,200 metric tons. That obviously is a marketing year low. Let's see where the cancellations come from. We've got, well, they've got it posted as unknown destinations, and a cancellation of 190,500 and also Dominican Republic canceled 133,200. And there are other cancellations. So that's what we've got there. The wheat market, and this is good news. The wheat market is right now unchanged from where it was when this number came out. So that's the reaction to the market so far. We'll touch again in just a few moments. Let's look at what the market's done over the last month. We're going to just discuss the range on over the last month. How low we got, how we got, and where we are now. Cotton, the high was made today. 67.90 is the high, and the low was made back March the 3rd. We've rallied probably about 560 points. Well, that's the total range, about 560 points, and we're on the high. So that's the news there. We continue to firm up. In the cotton market, going to soybeans, we've looked at a range there of about 44 cents from low to high, and we are right now, or overnight, we got to 9.93 and a half. That's the high of the last month. So we're making highs in beans this morning. We've seen about a 46-cent range from low to high. We're up against the high right now. Corn and wheat are going to be different stories. We actually, just I think yesterday, were down against the lows. July corn has had a 43.5% range from low to high over the last month. and now the low of that period was 362.5. Right now we're at 368 and 3/4. The July wheat had a very large range, a range of 78 3/4 cents from low to high over the last month. Right now, the low in that period was 464, and right now the market's at 487.5. So you're on the lower end of the range there. So that's sort of what we as we review the last month, what we're looking at. Normally now we would talk about what's the news affecting these markets aside from these exports, and quite frankly, there's the dominant news right now is what is the dollar doing? What's the value of the dollar doing, and why does that matter? And we're going to get into that in just a moment. But we could talk about the weather. We could talk about supply and demand. We could talk about carry out. We could talk about a lot of things. But what that news that trumps everything is what is the dollar doing? And so let's talk about that. The effect of the dollar. If you look at when did the dollar really start to move up over the last year, it goes back about a year ago. May the 8th, 2014, the dollar was trading at 78.90. Then about 2 weeks ago, it got over 100 on the index. Now we're back, and the dollar's trading around 94.95 to 94.96. So we have been backing off. Why does that matter? Well, let's talk about that. Let's first look at the performance before we get into that of these markets. Back on the 8th of May, as we look at what various markets have done, as the dollar has trended higher What has been the effect on markets? During that time period, that day, May the 8th, 2014, the cotton market in July was trading 82.19, and the low we saw 7 days ago was 62.35. We saw almost a 20-cent drop in cotton during that period. And soybeans on the 8th of May 2014, July was trading at 12.44, and now 3 days ago we saw a low of 9.65. That's a drop of $2.79. During that same period, the dollar was rallying. Corn, on that date a year ago, corn was trading at 5.30. 3 days ago we were trading at 3.62.5. That's a drop of $1.67 a bushel. Wheat a year ago was trading at 7.59. 3 days ago it was trading at 4.64. That's a drop of $2.95 during this period. Crude oil was trading a year ago at 91.06. Today, or 5 days ago, it was traded 55.76. That's a drop of $35.3 a barrel. The gold market during that period was at 12.89 a year ago. 4 days ago, it was at 11.74. That's a drop of $1.15. So you can see during this period what we've seen various commodities doing. I want to go ahead and refer to you, if you're on our site right now, or you're looking at this on a delayed basis, on the Ag Market Network site that you're on to see it, or you can go to, I have a chart posted. It's on Facebook, and you can pull it up on Twitter. It shows two different charts, one on top of the other. The one on top is the dollar index, and you can see, going back over the last year, what's happened. Then under that, the chart under it is the CRB. That's the commodity index. That's a sort of a basket of commodities that make up, sort of like the Dow Jones is for stocks, the CRB is for commodities. You can look at that chart at the bottom, and you'll notice the dramatic correlations we see there between those two markets over the last year. And as we look at the CRB has dropped 26% over the last year. So what did the dollar during that period? What did it do? The dollar index rallied 27%. The dollar index was up 27% over the last year. The CRB, or reflection of commodities, down 26%. The Dow Jones, which benefits as money comes into this country, was up 10% during that same time period. Again, it's more meaningful if you can look at that chart I've got posted. What are the reasons for this? Well, there are a couple of reasons that the dollar value strengthening in the last year affects commodities. Let's go over those. First off, foreign countries buy things from us. They buy our commodities. They buy other things, but we're talking about commodities here: cotton, grains. When our currency increases and their currency decreases, they lose purchasing power in what they can buy from us. So they can buy less of whatever they're going to buy, and less can affect commodity buying. So that in of itself is a negative for commodities. In addition to that, countries whose currencies are weakening affect their economic growth. It affects the health of their economies, and typically people start buying less things in that country. And so two different factors that affect the strengthening of the dollar, the weakening of individual countries. So it goes without saying, if you reverse this trend and the dollar starts to weaken, we can see more buying of our products from us, which will have a positive effect on the market. There's another reason that the strengthening dollar has hurt the market, and how the market turning over and weakening will affect, and that's commodity funds. Commodity funds are large speculators. There are different types of funds. There are index funds, they're hedge funds, and these are people that invest in commodities, and they consider commodities an investment. Over the last year, with the strengthening of the dollar, weakening of other currencies, it was perceived that it was not good for commodities. So many of these really large speculators were backing out of commodities, pulling out of them, moving away from them. And the effect you can see here, as I gave you these prices, have helped contribute to the negative trend in the markets. So the last thing I would tell you about this is when it comes to countries increasing the imports from us, that takes a little time. That's not something that happens overnight. It takes a while for that to start factoring into the market. But when it comes to the big commodity funds, the billions of dollars that are out there that can be put into commodities, that can happen very quickly. And I think it's starting to happen in recent days. You're starting to see all of these markets lift off. And this news trumps everything. When these indexes start to buy commodities, it's an across-the-board buy. They don't look necessarily and say, let's get some cotton or let's get some gold. It's across the board, and they buy everything. And you'll see an across-the-board rally in markets from every direction. That happens quick. So there are two different factors that can affect these markets in terms of buying. So I don't know. I'm not an economist that follows the dollar and understands it. I just know the effect the dollar has on commodities. And if we're going to continue to break down, we've taken out a 2-month low 2 days ago and 3 days ago in the dollar. If we continue to weaken and we're down on the day, you're going to see more people coming out of their long dollar positions, and you'll see more people buying commodities. So that's really it. I just wanted to go over that. Thanks for joining us here at the E3 Live Market Report. Hope you'll join us again next week at the Ag Market Network. Thank you.